Shreevar Kheruka joins us, Managing Director with Borosil, and let's first understand the big picture, how life has changed after yesterday's spin-off, and now Borosil shares are trading ex-demerger of the Borosil Scientific Limited. Shreevar, good morning. Thank you for joining us. Just explain to our viewers that why did you decide to spin off the business, the current entity, what is trading right now, what does it have, and what are growth prospects?
Well, thanks for having me. We have two businesses in Borosil Limited. We are the consumer products business, which are basically kitchen and table products, and which is the brand I think most consumers are familiar with. And we have a scientific products business, which encompasses lab, glassware, laboratory instrumentation, process systems like for chemistry, flow chemistry, and so on. And we found that most investors were either bullish or on one or two, or on one or either of the two segments. So we figured that it made sense to split the companies into two, as they have two totally different outlooks in terms of growth, in terms of the capital we need to drive into the business, as well as the return expectations. And we see both the businesses growing well, and therefore it was the right time to split the two.
There's always been a glassware company, and I'm talking about the consumer business here, but now you're venturing into new consumer durable categories. Consumer durable is a highly competitive market. It requires a lot of upfront investment, and return ratios are not the fantastic. Why are you looking at diversifying into what could be called as a mass product category?
Well, right. In the past, Borosil was a glassware. In fact, the company's name was called Borosil Glassworks Limited. We changed this back in about 10 years ago. And since then, we've considered ourselves as to be a consumer-focused company, and we will make products and deliver products to the customer as per the needs of the customer. So customer centricity has become really our focus. In that regard, we find that we have many customers in many areas of the country where we were not able to reach because our product was not relevant. And that was when we came up with the idea for expanding our product range. While you rightly mentioned that the appliances, the home appliances, etc., is very competitive, but we have been able to have a mass premium position here, and with the quality we offer, with the service we offer, the return expectation is more than justified by our expansion into these new markets. We also found that by getting to these new geographies or these new product categories, we've been able to expand our core glassware offering into areas where earlier they were not really available. So there has been a healthy kind of knock-on effect from these products onto our core glassware and our opalware range as well.
Okay, fair enough. So that is about the two business, but let's discuss the consumer business in particular. What about demand in terms of how it's panned out for Q3, considering we've had the festive season as well as the wedding season? Do you think that growth will come majorly from volume or from value?
Well, I think Q3, certainly the Diwali was a good one, and we had robust demand across all areas. We have many channels. We sell through trade, we sell through e-commerce, we sell through large format stores, and so on. And we saw a fairly broad-based growth in demand across the channels. And we're quite satisfied over there. And the demand was, the growth was volume-driven. We've not taken any price increases in the last few months. So all the growth we've seen is more or less volume-driven, which is quite encouraging for us.
That's the view coming in. So if I may just drag that question further, the first half for FY24 saw a 15% growth. For the second half, do you think it'll be better than the first?
Yeah, well, I mean, I'm not going to comment on quarterly numbers, but in principle, we've always forecasted a medium-term growth rate on our consumer business of between 15 and 20%. And I think we'll be at the higher end of the range if I look at the short to medium term. And on the scientific business, we forecasted a growth of between 10 and 12%. Here also, I think we'll be beyond the higher part of the range in the shorter term. But if I look at a 3-year window, I believe our consumer business can look at maybe doubling revenues every 3 to 4 years. That's really the broad outlook.
Okay, what about the scientific division? I wanted to understand there as well. That saw some pressure when it came to margins last quarter. Is that pressure only going to continue? Are you seeing a pickup?
Well, actually, the core range of products that we have in scientific is actually doing very well. The pressure is really coming from a lot of investments we are making in R&D, and these are, I would say, very good investments for the long run. So yes, they do look like they impede the margin in the short run, but I believe that the new products we're developing, we've got a big team of engineers. We really believe that India has a lot of design and engineering capability in this area. And by investing in that, let's say, talent, we've been able to develop products which are really world class. And these products will definitely drive margin improvement in the quarters and the years ahead. We don't really look at business from a quarter to quarter perspective. We have a longer term view. So the margin depletion in the last couple of quarters is, let's say, a blip in the journey for that division.
Okay, good to hear that. Tell me what's happening about the capex, your 625 crore rupee capex, which was planned both for the consumer as well as scientific business. What's the status on that?
Well, we've almost completed the entire cycle. Our last plant is going to be commissioned, I think, in January, the first week of January or the second week of January of 24, and that will conclude the capex cycle. Out of the 625 crores, we finished 525 or thereabouts. About 100 crores of capex we have deferred because we had thought of this during COVID when supply chain challenges were very, very pressing. And now those challenges have since depleted substantially. So about 100 crores we have deferred that capex, but the balance is all.
Okay, fair enough. Give us a sense as well in terms of the increased competition, because that from the smaller players, from the unorganized sector, all of that, particularly in the kitchenware category, is picking up. Is anything worrying you? Are you confident about maintaining your market share? What strategies are you using to alleviate competition?
Frankly, there's always been competition in these segments. So I don't see, it's not just a direct competition directly for glassware or directly for appliances. We have a lot of substitute products also, which are used in the home, in the kitchen, and on the table. So competition has never been something it's not something new for us. And I believe that we have, we focus on our own offering, and we focus on our conversations with our customers, and we keep differentiating our product and driving value. So competition was always there, will always be there, and I don't see the intensity of competition changing, in either direction. So it's a very large market, and I think our brand offers a certain promise to our customers, and if we keep doing those things correctly, I believe we can grow at the rates that we have already forecasted, for a long term, for a long period of time.
Sure. Good luck with that, Shreevar, and we'll chat again soon. Thanks for taking the time out.
Thank you.